Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I'm joined here with Dave Lukas. Today's Monday, the 14th of August, and we have markets kind of stuck in a range, have been pulling back now for a couple of weeks, but in a very, very orderly fashion. We're down about 3% on the S&P. I think the NASDAQ is 6%, something like that. Very slow, very drifty, dog days of summer type price action. So, of course, that's bringing up a lot of, bearish theories like, oh, this is the end of it. This is we're going to tank from here. We're hearing all kinds of things from people. I myself think that this is part of the natural structure of markets. It's doing exactly what it needs to do to fix that weekly chart, which was in exhaustion. Dave, what are you seeing out in markets this week?
I'm the same as you with the kind of the overall trend. We're back into a bull. We've had one hell of a run higher, exhausted that weekly chart, and we need to charge it back up. So bull markets are typically, kind of, peppered as they continue to go with these 3 to 5 to 7% pullbacks that kind of set the new, higher low, and then as the next point to jump off from. And so we're kind of seeing that. I would like to see things at least like on the S&P go a little bit lower. I'd like to see us around a 5% or so to really cement that. And the reason being is that just really helps to put in those levels. If you just do a little shallow pullback and then scream higher again, it's really hard to hold it. But right now that's kind of what we got. Now we're not really going anywhere, which is kind of interesting because I think Friday we were down 4 or 5 points in the S&P. Today we're up like 11, or 12. So we haven't really gone anywhere for the last few days or so. And that I think there's going to be some movement this week. The retail sales are this week, and we've got a number of retail earnings this week. It's like a whole retail week. And to me, the retail, it's been shaky all year, but what retail is kind of a harbinger of consumer spending. It kind of shows, what it looks like in the future, especially with the guidance of these companies. So we got like Walmart and Target and Home Depot and these others that are all reporting this week. And so to me, their guidance is what's going to be most important. Do they look optimistic through into the holiday season and all of that, or are they starting to trim their forecasts and stuff? And so that's kind of the thing that I'm looking for. I don't know if it's going to make any major movement, but it certainly, remember the market's a forward-looking instrument, right? It's trading on what it thinks future earnings are going to be. And so if it thinks that, things are going to slow, earnings are going to be lower, then, it may have trouble really going higher. And, for me, Doc and I go back and forth on this. I think that we could see kind of a precipitous move down any day, like almost like a little capitulation move, just to like wash this thing out and bottom and go. Doc, you're of a little bit different mind where you think we're going to see maybe a bounce up to a lower high first and then that. And either one's fine. I just think we need to go lower before we can truly break out higher in earnest.
Well, I think we both agree on the fact that to go higher, to go 2 steps forward, you have to take 1 step back. Now, we've gone 1 step back, maybe 3%. I kind of agree with you on the 3% may not be enough. And so I think if we do rally from here, so again, we're looking at all the different events that are coming up in the next couple of weeks, and we're like, okay, what's going to move the market? What's going to shock the market? The Fed minutes this week? Probably not. Retail sales tomorrow morning? Probably not. I mean, everything has been sort of in line for a while. It's always that data point that comes in from out of left field, like the Fitch downgrade that we had, and the other, I forget what was
Moody's.
the Moody's downgraded the banks. So those are great ones because they came out of left field and they really gave the market permission to drop over this 3%, because before that there was no real catalyst to push the market down. So all the sideline money just kept coming in. So I look at this and I think, what is out there that's going to cause the market to just free fall at this point? And unless Jerome Powell gets out there in Jackson Hole next week. Now, last year at this time,
probably the biggest chance, right? That's the biggest thing in the radar right now.
Last year at this time, he did that. He got out there at Jackson Hole and he was like, he was just, kind of robotic, and it was like, I must raise rates. screw your calls and all that stuff. He was, like, and the market just completely sold off at that point. But we're past that now. This is no longer 2022 anymore. This is 2023. There's a lot of sideline money. There's a lot of optimism. There's, things are working itself through. So even though everybody looks forward on this and says, oh, we're going to have trouble next year, we're going to have, they said that about this year. And nothing has really materialized yet. So I look at this and I think the most likely outcome from this, and I could be 100% wrong, would be a weak, shallow bounce, maybe about 100 points or so in the S&P over the course of the next few days, followed by complacency and like, oh, we're back in the bull market again. So that 3% move was really tough, wasn't it?
Crushing the tiny bit of volatility that we've gotten.
Right. And then the trapdoor opens up, and maybe, the timing actually would be perfect for Jackson Hole next week.
Yeah. Well, you've got a few things next week. So you've got Jackson Hole, you've got the BRICS Summit, where they're supposedly announcing their gold loosely backed currency, right, which is going to be a competitor to the dollar. If you guys have not had a chance to go watch, we did a kind of an overview of all this in the mid-year review, and that's up on YouTube. You guys go watch. It's long. It's, we did about an hour and 20 minutes with everybody really going through strategy changes and different things we're seeing, how we're going to approach the back half of the year, and some things about the kind of the future of the financial system and the dollar as a whole, talking like decades, not, even years. But the BRICS announcement of that dollar, I think will be competitive from a payment standpoint to start, but they don't have a bond market. Like, the U.S. is the biggest, most liquid bond market in the world. It ain't going anywhere anytime soon. So they would have to develop all that. So I do think that there'll be something around that, but I don't think you're going to notice any major things right away. But over time, you'll start to see the dollar's had its share dropping, continuously. It's at a 20 plus year low now, and it's continuing to drop. I think that new currency is going to eat into that. So we'll have to see how that does anything. I don't think markets are going to care too much about that yet, though. So it's going to be all the Fed. And then honestly, the other major big thing next week is NVDA earnings on Friday. That's the only other major thing. If they somehow have a huge miss on earnings or something, that could be something that really takes the markets down lower as a catalyst, unless we get something out of left field, right? Another downgrade or something like that happened. That was not even on the radar.
Let's take a look at that, by the way. Let's look at NVIDIA. And today they are up by 6%. So they heard you talking about them.
Big bounce.
Yeah, although keep in mind that this is still, that descending trend line is still there. So until that is bested, so price has got to get above 440 per share. And we're at some short-term exhaustion for 78 minutes, but that doesn't really matter. This is more of a pullback down to support, right? So what former resistance becomes new support. What I think is interesting is still no material attempt to close the gap. And we've seen a lot of these tech companies gap like crazy over the first 6 months of this year with no attempt to close. So we're going to watch that carefully. And then just while I'm here, I'm going to bring up the S&P really quick. And you can see how shallow and just sort of drifty this move has been. So this has been 3%. Yeah, there was a move on, I think this was the Fitch downgrade, which really got things kicked off back at the 1st of August. And then since then, it's just been choppity chop. But what you'll notice is that every time there is a breakout attempt, every time that there's, and it's usually in the morning, we're getting these big upper wicks on the candles, and then we're just selling into the close. Big upper wicks, and then we're selling into the close. So that is corrective behavior. And so what you'll see is what will change that will be more than likely negative to begin the day, and then we rally into the close. So watch for an opposite.
Doc. Hey, Doc.
Yeah.
I got the YouTube up on the side, and it looks like the screen isn't showing. It looks like it's got the Zoom link up there.
Oh, shoot.
For everybody to see.
All right.
So it's good analysis. So I want to make sure you get on the screen for everybody.
Yeah, I seem to be, all right, let's try this one. When you're on Zoom, it's like they give you all these different options to pick, and it looks like I'm always picking the wrong one. All right, I think we got this one here. So again, this is
Let's see if it pops up here. Right now, it's still showing the Zoom screen.
Are you kidding?
Yeah.
All right.
Anybody else out there watching? Are you guys seeing the Zoom screen? Are you guys seeing Doc's charts? Maybe it's just me. Go ahead and type in the chat. We'll make sure.
All right. Let me try this one more time here. Yeah, if this doesn't, oh, I'll tell you what, this is what I need to be doing. That's the problem there. So instead of doing the share, I can just do it on this side.
There you go. Now it's up.
Yeah, I'm going to stop. I'm going to stop the share and just do it on this way. So
yeah,
I'm doing it wrong. I'm doing it wrong. All right. So again, this is just the 3% pullback that we've had here, and it's very drifty. And again, what I want to call your attention to is every time we have a breakout attempt here, where we're and it's usually early in the day. We're usually getting the strength early in the day, and what's happening is we're selling into the close. So that's showing that the bears are in control. What you want to watch for is when we have the opposite. When we start off the day super negative. If you want a great example of that, go back to, what was it, October in 22, where we started off the day hugely negative, and then we went straight back up again. Actually, let me find that day here, because that's this one here. That was the very bottom of the bear market, where we reported CPI and it was too hot, and all of a sudden we sell off, and then we ended up the day much, much higher. Look for those reversals. Look for the reversals where we start off negative and then we end up the day positive. So my thought here is that, again, maybe something negative will happen, but this is an awfully strong confluence point here, not only with a pivot at 44.50, but also the ascending trend line. It's going to be tough to break through that. Maybe intraday we could see something like a hammer coming down, undercutting 4,400, and then breaking above there, back up to 44.50. But the easiest path for this thing is to slightly bounce up and then get torpedoed. That would make more sense to me in terms of the market. That would make more sense, because what we need to do is to get that weekly chart back up to charged again, and then all will be right in the world. All right, so I'm going to go back to the middle, and we're good to go.
You mentioned the weekly chart. It takes some time on that weekly chart to charge it up. So we're kind of in this malaise, right? It kind of seems like we've got some movement, but we're going nowhere, right? It's just kind of like up and down, but we're never not going anywhere. That is, again, one way to charge up that chart. But on a daily chart, that can happen. That only needs a few days, right? Because daily moves happen over 6, 8, 10 days at the most. But weekly charts, it's a weekly, right? So a weekly trend can go for 7, 8, 9, even 10 or 12 weeks if it wants to. So charging it back up can take 2, 3, 4, 5 weeks, right? So we may just see us kind of drift into September at this point until that thing's charged up again. And then it's going to be interesting you need to be real careful at that point when that thing gets charged back up again. What you'll look for is when that daily chart's charged back up alongside that weekly chart. That's when you got the next big move coming either way, right? I would say it's most likely at that point to head higher unless we've had something crazy come in that, just really waylays the market. But that's the big thing that we're kind of looking for now. We want to see those couple line up, and that it may take the better part of this month to get there. And then as we get into September, as we get towards that next Fed meeting, right? If it looks like they're truly going to pause, and maybe that's it, that may be the catalyst. But there's, around that time, so you just need to be patient, right? We trade every week, but sometimes the best trade is not to trade. And during that time, we may say, hey, we're going to hold back and just let this thing show its hand, and then take advantage whichever way it goes. And that's, I think, an important thing to keep in mind for yourself as well as you trade into this in the coming weeks and months and all that stuff.
There is the fractal energy. It's got 4 basic rules that I follow. And rule number 1 is that larger time frames dominate the trend, right? So we have this monthly uptrend and a huge monthly push, and that's especially gotten kicked in since the June timeframe, right? And then we go opposite to that with rule number 2, which is that reversals happen from the inside out, and then they propagate higher in time. So the NASDAQ is a little bit different because the NASDAQ has already thrown off a lower high and it's already pulled back maybe 5%. But even the S&P it's not a downtrend yet on the daily chart. And so what we have to watch for is if we do a downtrend on the daily chart, that'll turn into a weekly pullback. And then what's important is any rally off the weekly pullback, if that turns into a lower high, all of a sudden you've got a monthly pullback happening. And that's a lot more serious.
I'm curious if you mentioned the NASDAQ, pull up the NDX chart, because that monthly chart's getting close to exhaustion, especially on your 9-day time frame that you like to look at. And so the question is the NASDAQ done at this point?
I still stick with 14 on the monthly because I don't use it for really timing or anything like that. So I'm looking for really extreme values. Let's go over and take a look here at the NASDAQ. Okay, so let me get some of these fibs off of here. We don't need the fibs. Okay, so we are just about charged up again. So this is what I was talking about here. The NASDAQ has already gone through. This is higher lows, higher highs, and all of a sudden the NASDAQ pops in a lower high the other day, a couple of weeks back. And this is so this is where things started to erode. So this becomes a weekly pullback then. So the danger here is in any kind of rally sets up which fails, that becomes a weekly change in polarity. So now all of a sudden the weekly chart is pulling back into a downtrend. And what that means is you got a monthly pullback. Now, a bear market is when you have a monthly chart, lower high, change in polarity. That is what happened last April in 2022, right? So we had that big. So it all follows a progression. It starts off with a real small time frame, moves over to the daily chart, moves over to the weekly chart. And what I love about this is that it's a very linear progression. You can follow it through. And basically what you can say is, all right, if this happens, then what would have to happen for this to change into an uptrend or downtrend? And you can pretty much box it up, right? This is what we call Darvis boxes, where you can just set up these decision boxes and say, hey, if it breaks through here, then all's good. If it breaks down through this level, then this is bad. That's what I had to get to the point where I changed everything back in April of 22. I was like, okay, no more covered calls, no more selling puts, no more nothing like that. We have to completely flip our approach because this is now a very serious, ugly bear. And so by the same token, when it flipped to the upside, you and I were talking about this throughout the fall and into the early parts of this year, like, hey, we're starting to see reversals coming up. And so this is why it's important. You know, one of the things that we talked about last Tuesday in our update to the public was learn price action, because price action will prevent you from saying, hey, what's going on? You know, and then tuning into the news and saying, what's going on? Because you're just going to get pushed around with the tide one way or the other, and you're always going to be too late. And so understanding price action is, I think, the key towards this stuff.
Yeah, the thing that you just had up when you're showing the NASDAQ, the 100, you can see it. I mean, you see the weeklies now, like at 52, it's starting to tick down, and you've seen this like parabolic rise on the monthly, and it's down at like the monthly chart's down at like 45. Not completely exhausted, but definitely more exhausted from a monthly standpoint than really any of the other charts that are out there. And so, if we're going to see weakness and we're going to see it, start to pull back, I think you're going to see the NASDAQ pulling back first before the others. And that makes sense after the move that it's had. But, it's starting to happen from the inside out, right? So that's interesting that is a really good textbook example, if you will, to watch. But remember, monthly happens over months. Like I talked about weeks, right? And weekly, monthly happens over 8, 9, 10, 12 months. And so these things take time to unfold. So, we may just see the NASDAQ in a general malaise for several months, at this point. It may just kind of shop in a range for a while, which I love in trading, the iron condors on it and stuff on a monthly basis. But the only other thing that I can say, and we were talking about this too earlier, it's something out there. It's anecdotal, but it does. When a big player makes a move, you have to think about that a little bit. Michael Berry announced today. Michael Berry, the Big Short, the guy who called the housing market and made all the money and is famous for that. He's been wrong on a number of other things, but he disclosed as of June 30th, he's got 1.6 billion in SPY and QQQ puts. So he is shorting the market with the bulk of his portfolio, which and that's all you get. They don't tell you exactly what the positions are. They don't tell you what puts they are. They'll tell you when they expire. They don't tell you any of that stuff. But it's interesting that he's a patient guy, so he could have it out 2 years. Who knows? But
I just want to know. I just want to know what Paul Pelosi is trading. That's all.
Yeah, well, there's also that also came out too. There's another couple congressmen that have big short positions on the market right now. So they had to just disclose their short positions. So even the sitting senators are got short positions. So who knows? A lot of times that's the catalyst to go the other way and fade those guys, and it really cause a lot of turmoil. When everybody thinks it's going to go one direction, most of the time it turns around and goes the opposite way, and squeeze those guys and stuff. So we'll have to see. But yeah, so.
Hey, I'm just going to bring this up really quick. Before Dave and I finish up today, wanted to remind you guys, let me know if you have any questions. Let us know if you have anything targeted for one or both of us or not. We don't want to cut you guys off here at the top of the hour, but if you have any questions, let me know, and just type them into the chat box. Or if you're watching this on a replay later on at some point in the future, just shoot us an email, and then we'll cover your topic in one of our upcoming sessions. By the way, I think Dave is going to be doing a Ironman this weekend up in
up in Canada,
up in Quebec. So
yep,
I will be doing this. I'll be flying solo next week. So I just wanted to bring this up here. This chart. Now we're not going to run into 2021 every single year like this. But just to give you some perspective on the NDX, these are some of the typical pullbacks that we saw in 2021, which were just, this is just normal price action. We get up to exhaustion, and then it would chop sideways, and then it would pull back, and then it would build up. And so, what you got to do is sometimes look at the chart without today's context and say, you have no news, and look at this from a fresh pair of eyes and say, what's going on here? And you look at this and you say, oh, well, it's doing exactly what it should do. It went into super exhaustion here. In fact, it kept on coasting higher, and just a normal pullback is absolutely what all of these charts need. Now, does it need more than that? Now, we're going to find that out probably in the month of September. I don't think we're going to find that out really in the month of August. We may get some more shake and bake and a little bit more chop here, which would, I think, be good. I think it's good. You get a better base. Look at this. We went into exhaustion. It chopped around for a while, and then boom. You get a better base. You get a better lift off. You get a longer lasting rally if it chops around. You don't want to be too impatient with corrective price action and force it, because that's when the lower highs
on these charts. Yeah, a key thing to watch on these charts, especially the weekly, you don't really have it there, but if you just do, throw a set of Bollinger Bands, a standard Bollinger Band set on your charts, and with the simple moving average in it, and the typical pullback point during a bull is back to that moving average on the bigger pullbacks. That seems to be the level that, where things stop, turn around, and keep going. And those are typically bigger pullbacks. Like on the S&P right now, that would be about 4,300. On the NASDAQ, that would be 14,300. On the NDX or so would be that pullback to that level. And that would still be an uptrend, in that respect. So, that's something that is, I think, important to keep in mind to see it. Yeah, you can see there's 43.21 right there, about 4,300 on that. You throw up the NDX, you're going to see about 14,300 or so. So those are the typical levels on the weekly chart. And you can see it. If you go back, just right there on the screen, you can see back to the far left edge. When we were running higher, there you go. Look, all those pullbacks to the moving average and bounced, right? Then we had a change in polarity, and that actually became the resistance level. Then we went above it, right, this year. And now it's back to kind of becoming the support level. So those are probably the key levels to watch for from a pullback standpoint. If we bust through those and continue going lower through those, then something bigger is happening. So I think that's something important for everybody to watch too.
Yeah, and I'm just my thought is the way for us to get down there and test that level is probably to bounce first, and then set up the bull trap, and then come back down. So, Dave and I both agree that 4,300 may be in our future, and it would not necessarily be a bad thing. It's all what happens after that. So, does it bounce from 4,300 and create a lower high? That would be bad. If it rallies from this point, probably we don't want to see a new high on a rally from this point, because that would be probably a very tenuous and very weak pullback. So sometimes you really do want to take one step back to take two steps forward on the market. All right. So let us know again, any other questions, any other topics, anything you guys want us to tackle here in the last couple of minutes. We're happy to do that for you guys. So, Dave, what's different about this race? What kind of geography are you going to be facing?
This is a tough one. This is it's mountainous, so it's up at Mont Tremblant, up in northern Quebec. So it's about almost 5,000 feet of climbing on the bike, and then even the run has got about 1,500 to 2,000 feet of of elevation you have to go through on the run. So beautiful race. It's going to be awesome. I mean, the weather will be really nice. It's like fall there, compared to where we are. So it's typically in the 60s, low 70s at the most from a temp standpoint. And, trees are changing color, and it's a beautiful area up there. So it's known as one of the top destination races, but this is going to be the last year for it. So they're pulling out all the stops, actually. So it's going to be pretty cool. It's going to be a lot of fun. But every race has their challenges. It's like every market has its challenges. There's so many parallels between race and Ironman races like this and, the markets themselves, right? Every race has its challenges on the course. You yourself have challenges that come up that you can't necessarily prepare for, mentally and physically. You got to push through. The little things make the biggest difference, right? Your nutrition intake and how you your consistency and how you do your pedal stroke and your run stride length. All these things make a huge difference in keeping you going, and all of that. Just like the little things make a difference in trading. Understanding how to read price, understanding, like we were talking about today, markets move from the inside out, but the larger time frames are in control, and how to read that stuff. Like all of that is what helps to make you a better trader, a more successful trader. Is the same in racing these races. The biggest challenge is the mental one. After swimming 2.5 miles and biking 112 in the hills, and then you got a marathon you're in the middle of, there's a point where you just don't want to do it anymore and you want to quit, and your mind's screaming at you going, what the hell are you doing? Why are you doing this? And you've got to bust through that. You've got to beat that mental that mental plateau that your mind hits, right? And bust through it. It's the same in trading. You hit these times where your mind just can't take it anymore. And a lot of people capitulate, and that's the end, and they lose their accounts. And usually right after that's when, things actually turn in their favor and stuff, right? And so it's the same type of stuff, right? When you get on the other side of that mental battle that you have to go through about wanting to stop and you can't go any further, is actually when you bust through and all of a sudden there's nothing that can stop you, right? So there's tons of parallels. One of the reasons I love doing it, because it's a great preparation for business and trading and things like that.
I always found a lot of analogies from flying that fit to trading. You want to get off the ground, you want to get some altitude, you want to get airspeed, you want to, once you get off the ground, you want to stay up there, unless you're intent on coming back down, those kind of things. And, staying ahead of the airplane, I think was important, because a lot of us, we don't anticipate, the chaos that comes, and learning to anticipate the chaos, especially during times of complacency, I think is very important. All right, I think
Great advice.
we have reached the end of our session here today. So from Dave and myself, we'd like to wish you guys a great trading week. And like I said, I'll be back here next Monday to do this solo. And you guys have a great week. Thanks everybody for
Take care,
joining
guys.
us. All right, take care
Thanks for
now.
joining.